we've been talking about the broad retreat in commodities and then a turnaround at the end of the day for some of them. We welcome Jason Schenker right now from Prestige Economics. He is one of the most accurate forecasters for precious metals, for industrial metals, for natural gas, so commodities basically across the board. And he joins us now from Sao Paulo, where he happens to be spending time as a keynote speaker. Jason, what are you doing down in Sao Paulo?
I'm here for the Expo Cicada. It's the largest scrap metal conference in Latin America. It's a really big deal, and that's why I'm here.
All right, so let's talk, because you start with an industrial metal there, let's talk about what's been happening in copper. I thought it was really interesting that there was a turnaround today. Although it has been getting hit pretty hard lately, it makes me think people's outlook for global growth is depressed. Is that the way you see it as well?
Well, I think that what it was is last week, everyone's views on global growth and industrial metals went through a readjustment. Now, those prices have overcorrected somewhat, but the fact that the Fed did not implement QE3, the fact that the twist option is going to mean very, very little in terms of stimulus, means that the markets had to readjust their expectations for what metals prices are going to be and what's going to happen with the dollar. And you've seen the dollar strengthen, metals prices fall, and today you saw some correction in the industrial metals as well as in a couple of other markets from those, say, overshot readjustments last week.
So readjustments down, though, I'm getting that you think are going to continue even if they had experienced a little bit of a correction back up today.
Well, I say that things could get worse before they get better. Our expectation is for prices in the fourth quarter for most industrial metals will be a little bit lower than the average prices in the third quarter, but they will be higher than where they are now. And we also think that metals prices are likely to trend higher next year from where they are now as well. And that's really based on the fact that at the end of the day, this is all about supply and demand and global growth. And some of the metals prices, if you look at aluminum, if you look at copper, these prices are being pushed to levels that are very, very attractive for physical purchase. And that's going to pull those prices back up with global demand that's still growing at 4%, even if Europe and the United States are languishing somewhat.
Jason, let me ask you, in terms of the trade that we've seen on a lot of commodities where we've seen some price pressure, how much is the result of fundamentals and slowing economic growth globally, and how much is the result of negative sentiment thanks to Europe at this point?
Well, this is a great question. This is a question I only used to get around energy, and I'm glad people are now talking about it with metals. Whenever you have a market where you can trade in the future, your future expectations affect the prices in the future as well as the present. And that means that pricing we see today for energy or for industrial metals is not only impacted by the physical supply and demand and the physical cost curves now, but it's also impacted by the expectations of future supply and demand. It's really, there's this circular feedback loop with prices that you see both for energy and for metals. And if the outlook of the IMF is to be believed, and we expect 4% GDP globally for the next 2 years, that's going to be supportive of industrial metals demand.
But what's the split? Is it 50-50 between fundamentals and the global economic outlook and 50% is sentiment? Or give me an idea in terms of what we're trading on here.
Well, right now, I'd say in the last week or so, it's been more. And it's maybe more on the future expectations rather than on the current reality, and that's why we expect those metal prices to go up.
Right.
But in the medium and the long run, if we look quarters out, quarter averages in prices are going to be driven or supported at the bottom for industrial metals by supply and demand. For precious metals, you don't have that kind of support because while gold or silver are a good store of value, especially for gold, it's has a greater historical role as specie, very limited industrial role, and that means that it's going to be based a lot on perception and a lot what happens with the dollar. And right now, that dollar bounce, which is somewhat justified but somewhat not, that's actually pushing these prices around as well.
All right, hey, Jason, thanks so much for joining us. Really appreciate it. Jason Schenker there from Prestige Economics.